You don't need to lose your whole money before you realize that you should have walked away. When trading, one of the first things you need to prioritize is your risks. You need to understand that trading is a probability game. You can't win all the time. So the earlier you start focusing on risks, the better you see progress in your trading portfolio. Now, risks is boiled down to the amount of your capital you're risking per trade. You need to be clear about it. Are you risking 1% of your account per trade? You can't just jump into trading without knowing what you're actually risking, and you can calculate it. There are websites that help you to easily just calculate the risk per trade. And when you say risk per trade, it goes down to more than just knowing what you're risking per trade. You need to know what you're risking per day, so that if you know you're going beyond the risk per day, you're going to also understand that you're not following your rules, you're not following your plans, you're not following what you have written down, and the possibility of you to be consistent in the long term will be very low. But when you have idea about, okay, what are you risking per day, and you follow that plan for 3 months, 6 months, you just psychologically become consistent with what you are risking. You also need to know your maximum risk per month, and most times our advice, it shouldn't be beyond 10% of your account. So if you have a drawdown of 10% of your account, then you have overtraded, or you have lost so much that you need to calm down or walk away from the chart till you are psychologically balanced to come back. I would say for your trade per day, you should risk 1% or 2% depending on your capital, but it shouldn't go beyond 2% of your capital. And when I mean 1% or 2%, it doesn't mean the first trade is just 1% straight up. It could be that you break down that 1% into two positions, so that if you take the first trade and it goes well, you can take another one. Or if you take the first trade, it doesn't go well, you have opportunity or another bullet to take the second one. But if you just pour out the whole 2% straight up, if you lose, you're taking another trade. That's not 2% per day, that's 4% per day. So you need to be clear about, okay, if I'm risking 2% per day and I want to have more than one opportunities to trade, then I need to break that 2% into more bits, because at the end of the day, it's still probability. You can win the first one or still lose the first one, whichever one. But you want to be clear that, okay, if you are going to have more than one opportunity, so that you can just execute when you see your criteria.